Hello, it's Robert Miner with Dynamic Traders Group with this week's short video we do for our YouTube followers and subscribers and our Twitter followers. It's a short video where we take a look at one or two markets that may have a trade setup coming up in the next week or so. We do these every week or 2 weeks, and I hope that you took advantage of the video from 2 weeks ago that we did for the S&P and Bitcoin. You can go back and take a look at that and see how that sets you up for the rallies in both those markets. And of course, we update all of those markets 3 times a week with our DT reports. So if you like what you learn here, check out our DT reports at dynamictraders.com. So there's something I want to show you before we get started. Last weekend, my wife and I took a couple of days driving up and down the Blue Ridge Parkway in North Carolina here. And it's a beautiful time of year because it's fall, all the leaves are changing, that sort of thing. And when we drove by a small parking lot that was at a trailhead from one of the trails off the Blue Ridge Parkway, I saw this Jeep Wrangler with these skeletons attached to it that I've got a photo of here. It was fantastic. I had to pull over and take a look at it. It was so much fun, and it was obvious someone took so much time to put this together. These skeletons went all around the car, including on the wheels. So it was a lot of fun to see it. I had to take some photos. I wanted to show it to you because I thought you might get a kick out of it also. So Halloween, of course, is this coming Monday. So it was just a real joy and a treat to be able to see something like this, and someone who put so much time and probably not a small amount of money into organizing this whole display and decoration. Okay, let's get started. We're going to take a look at the gold market this week. This is the weekly gold data. There's a couple things we want to look at here. The first thing is that following the momentum cycle bull reversal about 4 weeks ago, we would typically anticipate that if we made a higher time frame reversal and had completed a corrective decline, that the pattern coming out of that would be impulsive. Now, these are Elliott wave terms. They're the really basic Elliott wave. I keep it real simple. Impulsive and corrective. So coming off of that momentum cycle bull reversal, the pattern wasn't impulsive, it was clearly corrective. In fact, 3 weeks later, even though the momentum had been positive during that time, is that actually gold closed lower on the week 3 weeks later. So this is a real divergence between the momentum cycle and the price cycle. And when you get that divergence, it just reflects that there's no buying power in the market. There's no enthusiasm in the market to get long. And that more than likely, and this is the key, when they're diverging like that, more than likely this is a correction, not an impulsive trend. So if you can recognize that a market is making a correction, you want to focus all your attentions on identifying the end of that correction, because, real simple, what follows a correction? Well, it's the resumption of the trend prior to the correction. In this case, it would be the bear trend. It would be when the correction is complete, then gold should continue to make a new low. Now, in the past few weeks, we've been looking at any of these weekly momentum bull reversals as the potential for beginning a higher time frame bull trend, at least something that lasted more than 3 or 4 weeks. None of them have panned out to be that. So we got to let the market be our guide. We can identify the conditions for a potential reversal, but then the follow-through has to be the type of follow-through that would indicate that the trend would continue, in this case in an impulsive fashion. Well, it certainly did not do that in the past few weeks. Let's take a look at the daily data, because Friday was significant for the gold market. This is the daily data right up through Friday, the October 28th. And we won't go bar by bar, but after this is the CPI announcement on the 21st, big outside reversal day. A lot of people got really enthused and bullish on gold. I was looking at it also like this is a nice technical reversal, but it did happen on a news day. So if it happens on a news day, you want to see immediate follow through, and if there's no follow through, then it's very suspect that it actually made a reversal that's going to last. And of course, the following day actually closed lower, basically a little sideways up for a couple of days. And this was a potential ABC. I've got it labeled an ABC now because it's proven that it should be that. At the time, it was a question mark. And what we looked at in our reports, which we update 3 times a week, let me put the close in here, is that should gold close below 1656.30, that was a little swing high close on closing data. There's our closing data, little swing high sideways to a new closing high. If it were to close below 1656.30, it would indicate that indeed this is a correction, and what follows a correction, probable new low. So that's where we're at right now as of Friday, because the Friday, of course, not only closed below that closing level, it also traded a tick or two below this little swing low. So that's how we focus in on the immediate position of a market to try to help us understand the probable trend and outcome of the current position. So right now we put everything together between price hitting the 50% retracement, a probable ABC pattern, then closing below, actually the closing lows, all the closing lows of that section, is this was the signal that more than likely the trend is going to continue down. And of course, that was accompanied by a bear reversal in the weekly momentum. So what we can say from this information is that gold is likely to continue lower over the next week or two, probably about 2 weeks. Probably will reach around 1605 or lower. And our stop on that bearish outlook and bearish trading strategy would just be a tick above Wednesday's high. There's no reason to have your stop further away from that. This either made it a reversal, completed a correction, or it didn't. So all your focus in the next few days, well, really beginning the first of next week on Monday, should be on the downside. So either for now, avoid long trades unless gold were to trade above the October 26 high. And for a short term, at least for maybe a week to 2 week trade, you might consider a short trade for a probable continuation down to 1605. And should gold continue lower as anticipated, if it reached around 1605, we'd then be looking for technical conditions that would complete that decline. So that's where we're at with gold over the next week or two. Well, if you liked what you learned today, be sure and subscribe below so you get notified every time we post a new video. And also, check out our DT reports at dynamictraders.com. You can also sign up for our Traders News. No cost whatsoever. You can sign up for it on our website and receive more updates during the week. So check that out as well. Remember, stay safe, stay healthy, have some fun, and always remember proper position size to limit your capital exposure on any trade. And that's one of the many things that we teach in our DT reports. So check it out. Take care. Robert Miner, over and out for now.